Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Wednesday, the 26th of December, 2007. And I hope you had a good holiday, but the market was back open again today. A lot of people don't trade during this time of the year, but something that I wrote on my blog today was that I found that this week, the week of usually between Christmas and New Year's, is generally the best week that I have during the course of any year, every year. And a lot of people look at the volume and they say, well, the volume's light, it was up on light volume or whatever. But the fact is, there's a lot of great momentum plays during this final week of the market. And I outlined some of the reasons for that on my blog, and I hope you guys are reading that blog, because I had also put on CSUN early this morning saying that this one could be ready to go, and sure enough, it did go big time. I had a great day with this stock, and actually some of the call options in it. I bought the the January 15s for $1 today. I've still got 4 of those left. But anyways, the market. Let's take a look at the market. I'd also outlined this on my blog earlier today. So again, there's a lot of information for you people who are viewing this on YouTube and other video sources that aren't looking at the blog. There's a lot of information that doesn't get seen by you guys, and also I don't get paid from my sponsors when you visit somewhere else. But I'd outlined this inverted head and shoulders pattern. Now the market still is in recovery mode, and overall with the 50-day moving average down through the 200, the 10 below the 20, and they're just kind of giving us a lot of mixed signals here. There is a potential bullish scenario setting up though on the S&P 500 where we look at this as an inverted head and shoulders. If you take the height of this pattern, which is basically 141 down at the head, straight up to the neckline at 154, that'd be 13 points. And you add that to the breakout point at 152, that would give us a price objective near about 163. Now, I'm not calling for that yet, but it's something to start to be aware of. Again, the volume was real light today and yesterday, but it does continue to move higher, and the only thing that pays us is price. When the market made it past that 146.80 last week, that's when the S&P 500 started its renewed upward momentum here in the short term, and we've got that rising 5-day moving average, which tells us that we should continue to give the benefit of the doubt to the buyers in here. As far as support goes, looks like at about 148.5 or so, and then below that, the next level of potential support if we run into trouble is about 147.20. The potential for resistance is going to be right up here near this trend line at about 152. And what I'd really like to see would maybe be even a continued run up towards there, a pullback down towards 150, and then a blast off up through that. But today the buyers were firmly in control, particular after about noon. They really came in and started to jam this market higher, and it's had a another good day, up 0.18%. The semiconductors were able to recover in there a little bit, still overall just in a horrible downtrend and maybe showing signs of bottoming, but bottoms are a process, not an event, and if they don't scare you out, a lot of times they'll wear you out as the market turns sideways. Let Warren Buffett find value here. Don't waste your time with these stocks. Instead, go where the action is, and the action continues to be in the smaller stocks, and we've seen this Russell 2000 bounce from this level of support, which is now pretty far away, that it's no longer really in jeopardy of being broken. We do still have a declining 50-day moving average, and the market's below the 200. So we're at a level where we've seen resistance a couple times at about 79.80 is that level, and that's been an important level for quite a while in here. That 79, so just call it $80 a share, has been an important level that the market has kind of waged this battle between buyers and sellers for the second half of this year, as the market's really done nothing since about mid to late July, although it's done quite a bit. It looks like it's flat since mid-July, but it's done quite a bit of moving around in here. Now it's up to a level where you would expect maybe we're going to see a little bit of resistance. It doesn't mean sell. It means be aware that there's the potential again for resistance in this area, but it doesn't mean you sell. It means tighten your stops and keep your eye on the definition of trend. Well, on the 10-minute time frame, you can look at these higher lows and say these are the areas where we ought to find support. First, it's about $78.60. Below that at about 77.5, and then way down here at about 76.40 or so. So the market continues to act strong here. There's been a lot of good stocks. You know, and I don't know if you guys are aware of this other blog that I run besides Alpha Trends, but you know, I talk a lot about short squeezes, and squeezeshorts.blogspot.com is a blog that I do as well. And here's where I was talking this morning about it might be time now for CSUN. I had spoken about it you know, 2 days ago or last Wednesday, saying that the stock looks strong. There's a big short position, 3.5 million shares, and sure enough, today this CSUN really took off, and I think those shorts are starting to feel a lot of pain in there. So keep an eye on the blog once again. The Nasdaq 100 today had a good day as well. It was up 26 cents, or about 0.5%, coming back into this important level where we've seen a similar battle being waged near that 52.50 level, where we've had prior support here turn into resistance on a couple of occasions, and now the market is once again extended at this point. Doesn't mean it can't just break out, and a lot of times the market likes to frustrate the most amount of participants. So what better way to do that than to launch a breakout on a holiday shortened weekend with low volume, when the shorts aren't there to defend the positions, when people don't want to sell their stocks because they don't want to they don't want to sell their winners because they don't want to pay taxes this year, so they'll wait for January. There's an absence of supply out there from short sellers, from market makers, where their primary traders might not be on the desk, and they don't let their junior traders take the risks that they might normally take. So there's a lot of bullish factors that come together this time of year, and we've got the market above this level here. There should be support going forward at 51.50, and then 50 cents below that right here at this higher low at about $52 a share. I'm going to continue to focus more on individual stock action this week, and if I see some good low risk plays setting up, I'll put them on that blog, so be sure to check. Thanks.